So, good day. In this video, we will be discussing the effect of financial ratios to the price of stock of publicly listed food, beverage, and tobacco industry in the Philippines. The food, beverage, and tobacco subsector remains one of the most attractive investment areas due to stable consumer demand driven by population growth and changing consumption patterns. However, despite this favorable demand environment, publicly listed FBT companies in the Philippines continue to experience persistent stock price volatility and recent declines. Prior studies confirm that volatility in the Philippine stock market is not temporary but sustained, with past price shocks continuing to influence future movements across firms of different sizes. Recent cases involving major FPT firms further show that rising costs, margin pressures, and economic conditions have weakened investor confidence, resulting in downward stock price trends. Since financial ratios such as liquidity and profitability indicators are widely used to assess firm performance and valuation, it is important to determine whether these traditional measures still significantly influence stock prices under current and market conditions. Examining this relationship will help investors and analysts better understand firm value and make more informed decisions in the Philippine capital market. This study will be beneficial to the following stakeholders. The first one is the financial institutions. This will provide insights in maintaining strong financial performance to enhance market valuation and attract potential investors. Second is the shareholders. This study will provide valuable insights into how financial ratios influence stock price. Lastly is the investors. This study will help make more informed decisions when selecting stocks for investment. In this study, it examines price of stock as the dependent variable. It represents the monetary value at which shares are traded in the capital market, shaped by underlying financial conditions observable through accounting indicators, and functions as an economic signal tied to profitability and efficiency evaluated through financial ratios, according to Halawa and others, year 2021. On the right side, the figure represents the independent variable. The first one is the current ratio. It plays an important role in shaping investor perception in the food and beverage industry. Anwar explains that liquidity, represented by the current ratio, contributes to movements in the stock prices of food and beverage companies. The second one is the return on asset. It measures the company's capability to create profits using total owned assets by a company in the future, according to Aziz and others, year 2018. The third one is the return on equity. It is beneficial to know and understand as it serves as a key measure of profitability that helps investors evaluate whether a company is using its equity base efficiently to create value, according to Sari and others, year 2024. The last one is the earnings per share. It measures the profit earned per share and reflects a company's ability to generate earnings for its shareholders, according to Andriani and others, year 2024.
Now let's move to the results of the study. Presents the trend of the current ratio among publicly listed food, beverage, and tobacco companies in the Philippines from 2019 to 2023. A major shift occurred in 2020, where the mean sharply increased mainly due to a sudden spike from Figaro Culinary, which posted a very high current ratio of around 35. This value stood far above the rest of the firms, lifting both the average and the overall spread of the data. The extremely high ratio reaching about 35 can be understood by looking at how the company managed its short-term finances during that year. Figaro kept its current liabilities very low because it slowed down major store expansion and limited activities that normally increase short-term obligations. This made the current ratio rise sharply, even though its current assets did not grow in the same extreme amount as shown in their financial statement. Now let's move. Next is the return on equity. As presented in the figure, return on equity from 2022 to 2023, the most noticeable movement occurs in 2022, where sweet foods show a significant spike upward to roughly 1.5 return on equity. It indicates a surge in profitability or efficiency in using shareholder capital during the period. Swift Foods recorded a positive return on equity in 2022 because the company generated net income in that year that enabled it to produce a return on its shareholders' equity despite a relatively modest operational scale. In the same year, Swift Foods reported positive net income that reflects profitable performance from its poultry and processed meat business that combined with controlled costs and other non-operating gains that resulted in earnings rather than a loss. Why is the return on asset? Based on the line shown in the figure, the return on asset chart from 2019 to 2023 shows clear fluctuations that illustrate how changes in profitability influence stock price behavior. The sharp decline in 2020, specifically the Rojas holdings, reflect the impact of COVID-19 pandemic, which caused reduced sales, higher operating constraints, and weakened asset efficiency, leading many companies to post negative return on assets. Such deterioration typically lowers investor confidence and contributes to declining stock prices. Specifically, these declines significantly due to pandemic-related impacts, reduced demand for sugar and ethanol products during lockdowns, and that the company faced wider losses in several quarters of the crop year. That reflects weakened production and sales as well as external shocks such as COVID-19 pandemic and earlier weather disturbances. So what is the earnings per share? Based on the figure, the earnings per share chart from 2019 to 2023 shows significant fluctuations that highlight how changes in profitability influence stock price movements. The sharp decline in 2020, indicated by Jollibee Foods Corporation, were reduced sales, operational disruptions, and rising costs. Several companies' earnings per share values to fall sharply, some even turning negative. That signals weakened earnings performance that typically leads to declining investor confidence and downward pressure on stock prices. The subsequent upward movement in 2021 by Jollibee Foods Corporation showed recovery as businesses reopened, demand improved, and firms regained profitability. That results in higher earnings per share that generally boost market sentiments and support rising stock prices.
And for the stock price, the data of 28 publicly listed food, beverage, and tobacco companies in the Philippines from 2019 to 2023 show fluctuating movements in both average prices and variability. This means that stock prices change over time and did not follow a consistent pattern. The differences in stock price behavior across companies indicate varying levels of market performance within the industry over the 5-year period. For the effect of current ratio or return on equity, return on asset, earnings per share on price of stock, the result shows that among the financial indicators examined, only earnings per share has significant effect on stock price. This suggests that investors give greater importance to per share profitability when valuing stocks. Higher earnings per share enhances investor confidence and positively influences market valuation. On the other hand, current ratio, return on asset, and return on equity did not show significant effects, indicating that liquidity and general profitability measures are given less weight by investors compared to earnings performance. And for the recommendations, first, investors and shareholders should focus on financial ratios, especially earnings per share, when evaluating FBT companies, as earnings per share significantly affects stock prices and support better investment decisions. Second, company managers should enhance profitability and earnings through efficient operation, cost control, and revenue growth to improve financial stability and stock valuation. Third, financial analysts and advisors should incorporate the study findings, particularly the importance of earnings per share and firms' evaluation and investment recommendation.
Lastly, for future researchers should examine other financial and non-financial factors influencing stock prices to broaden evidence on financial performance and market valuation.